As an efficient way to start, if you could type a quick hello in the comments box, that would be my indication, so I know that you hear me. Technology is on our side. We had the screen, we have the sound, and therefore we are ready to start. So please go ahead and type something nice in the comments box so we can start the session. Thank you. Okay, everybody, time to begin. So let me maximize my screen here on my side so we can have the proper slide, the proper screen, the proper beginning, and that way we will start the session. Just give me 1 second because I notice that there may be a little something for me to double check. 1 second, guys. Okay, guys, so it's confirmed. Everything is fine. So it's time to start. How are you, Bojan? Nice to see you, my friend. Nice to see everyone as well. And let's begin. So today is May 14, 2019. We are getting together today for short-term trading. So hopefully we'll find a collection of trades to be executed quickly and efficiently because it's intraday trading today. My name is Jose Blasco, I'll be your guide, and as always, before we begin, we need to go over the disclaimer, so here we go. The following videos, clips, and demonstrations are for educational and instructional purposes only. Tradictive provides this video purely for the purpose of demonstrating a method of using the product. Users understand that all the content used in the video is purely for demonstration purposes only, and is not a guide and does not provide any indication or prediction of actual results. As a user, you understand and agree that hypothetical results obtained through the demonstration do not indicate in any way that the results you may receive on using our products. Very good. So we have it. How are you, the Hyde? A pleasure to see you. We have it, and here is our trade station, and we are ready to begin, isn't it? Good. So actually, a trade just triggered a few minutes ago, and I was watching it, and I was thinking, such a shame that we are not starting a few minutes just earlier, because as you can see here, in the 15-minute time frame of the S&P, we just hit the average, okay? And a little time ago, there was a beautiful UFO at this price level, and price just went into the UFO, and the S&P started falling, probably reaching or getting close to reach the safety target. So this would be a trade that we could be in, but in any case, the reason why I'm saying it is so I help to refresh a little bit the memory of what we are looking for. We are looking for UFOs on the time frames above. We call them the edge time frames. So we are looking for UFOs lining up with the moving average below. And since the prior close has been below the average, we are in a downtrend. Now we need to be careful because even though we are in a downtrend, notice how this does not happen often, but notice how this is a weak downtrend. It is not a strong downtrend because we see green color. Okay, so we need to be careful. This is gonna has us set targets in a location which is not too far away. Okay, so guys, I can see on the right side a new UFO that formed, which is located at 2526, which is the location of the average, and therefore we have an opportunity to plan a trade and to execute it. Okay, so I want to move quite efficiently into planning this trade. Please work with me on that because we may have an opportunity to execute quickly. So if we were to plan this trade, we are looking to take profits at 22, so 28.22. That would be our target. Really, there is not a lot of room for movement, okay, given the fact that the current price of the S&P futures is 23.5. So we have 1.5 points of potential movement to the downside, even though really the trade is better than that because the entry would be located in this particular UFO, isn't it? So that would be the plan. Okay, so what do we have? We have the top being 26.5. I have a little bit of a concern though, so let me share my thoughts so we can plan the trade better. If price comes back towards the average will move up, and therefore that's gonna be 26 something, okay? And 26 something happens to be the end of this particular UFO, as well as the end of this particular UFO as well. So I'm a little concerned, even though I was getting excited, that we will end up buying in this white area, which is not where we want, sorry, not buying, shorting in the white area, which is not the area where we want to short. Okay, so what I'm gonna suggest is to keep watching those candles, because we may have new UFOs forming, and we may have a better trade in a few minutes. So what we're gonna do is move to the Nasdaq and see if we have a trade out there. Hey Andrea, very good to see you. How are you? Royce, a pleasure to see you. A pleasure to see you, everybody. So let's move into the Nasdaq, okay, and let's do the same thing. With the Nasdaq, we have the very same scenario. We have a close below the average. The trend is weak to the downside because we have green, right? And we have an average lining up at 73.80 something. Again, same comments. If this market goes back up, the average will move slightly up. Right, so instead of 73.81, maybe 73.82, 83. Well, that falls right in the middle of this UFO. Okay, so I am much more comfortable with the setup that the Nasdaq is giving us. Okay, so let's take a look at the target on the Nasdaq. Again, remember, we are talking about a weak downtrend. So I'm gonna set the target using the 15-minute time frame. If it was a strong downtrend, I will look at the 60, and in this case the target will be located at 73.63. That would be the location for the target. So let me go back to the edge timeframes now that I know what I'm gonna do with this trade when it comes to targets, and it would be time to begin planning on the entry. Okay, the entry here shows 78. Okay, obviously entering at 78, it's certainly valid, but you would be entering below the moving average. Okay, which sometimes you will see price go very close to the average and then bounce before touching the average, like for example this case. So it would not be crazy, but in this case, given the fact that the target is going to be 63 and 63, it's more or less here. Okay, you know, the amount of room for profit that I have from that UFO to the blue line below is not that great. Okay, and especially because I'm going to have a safety target in between. So I would like to give myself the opportunity to enter a little inside the UFO in this case. Okay, also I want to look at the other UFOs. Okay, and this may help me identify that. So the bottom part of this UFO, and I know I'm speaking a little fast here because we don't want to miss the trade, isn't it? So 78.75, okay, is the bottom part. So 78.75. If you look at the inner one, it's 81. Okay, we can see it here. If we look at the bottom part of this one, okay, if we're looking at the bottom part of this one, we are talking about 78.75, which is the same one. But now in this time frame, in the short time frame, which is normally more precise than the time-based time frame, the greatest concentration of orders is more located towards 79.5. Okay, so what else do we have? Where when looking at the tick bar, actually clearly the greatest concentration of orders is happening at 81.75, which that one is going to be lining up very well with the average if the Nasdaq comes back up before we have an update of the average in 7 minutes from now. So the bottom part of this UFO is also 78.75. So if you think about it, all the UFOs have the band begin at 78.75. So if I get too perfectionist and I go for that 81.75, which is a perfect entry based on the average, I am concerned I may miss the trade. If I go for the 81, probably that's going to be the best choice in the sense that is somewhere in between 79.5 and 81.75. So in this case, I'm just being a little extra perfectionist here because of the fact that the room for profit is not that significant, as I said before, and I want to give myself the opportunity to enter somewhere inside the UFO, but not too deep inside that I end up missing the trade. Okay, so I decided by looking at all those UFOs and given the fact that they all have a same starting point at 78.75, which is the bottom part of the UFO, I decided to kind of look at the midpoint between 81.75 and 79.5 and 81. Well, I don't mean like the midpoint as a mathematical calculation. I mean whatever UFO that was in between those three values. Okay, and therefore I'm gonna set my entry to be 81. Okay, so let's plan on the entry first. The target is gonna be easy because I don't know if you have noticed 86.25, 86.25, 86.25. All the UFOs have the same extreme, upper extreme, and located at the 86.25 level. Therefore, my stop is going to be above that in the white area. Okay, as we always do, the stop has to be in the white space. Okay, or black if you use a dark theme in your trading platform. But anyway, so let's go for it. I'm just going to enter the trade using the matrix. Okay, 81. I'm going to scroll up to find 81. Here is my 81, and what I'm going to do here is I'm just going to go ahead and click. I got two contracts selected, so the moment I do that, I have an order in for two contracts. Now, of course, the first thing I need to do is to move this up to 86.5, okay, which is going to be one tick above 86.25. Okay, so if you think about it, the distance between 81 to 86.5 is 5.5. Okay, so if I was to take a calculator and I was to calculate, I was to take 81, which is the entry, and reduce it by 5.5, we are bringing our safety target to be located at 75.5. Okay, 75.5 would be the location for the target. So the B above is going to be my safety target, and I'm just putting it here at 75.5. Okay, and that way I got equal distance for my entry and my stop, and my final target, as we said, is going to be 73.63. And you know, with the Nasdaq, the matrix is not necessarily the best tool because there is a lot of scrolling to be done, since it's only $20 per point and it moves many points a day. But in this case, since the size of the move is not that great, I think that's okay. Okay, so what do we have? We have the entry located where the blue arrow is. We have the protective stop located above the UFO, which also happens to be above this one and also happens to be above this one. And then we have our safety target, just to remove the risk of the trade and allow us to go ahead and take other trades in parallel. That safety target is located equal distance from entry to stop, equal distance from entry to safety target 1. And finally, our final target located at 63, that one, we came up with that target by looking at the UFOs in the 15-minute time frame, and we picked the first green UFO that was located at 63. So that is the plan of the trade, and this trade, I am guessing that some of you are replicating this trade in your computer systems, in your platforms. Way to go. Okay, again, make sure you all understand that this is a trade that I am executing on my side, and you are more than welcome to mimic me, but it's going to be your decision to use paper money, real money, a small size or a big size. Okay, so all of these will need to be your decision, obviously. Okay, so just make sure you keep that in mind as you replicate what I'm doing. Okay, and this trade, having said all of that, which I started the session, I've been talking non-stop, I'm going to stop now and look at your questions. This trade is valid for the remaining 2 minutes, because in the remaining 2 minutes, 2 minutes from now, we're going to have an update in the bottom part of the screen, and if we have a close below this average, okay, the average may be recalculated, and that may impact the entry point or maybe even the target if we were to have red DMI show in the bottom screen, which at the moment it looks like it's going to be green, but we will know for sure in 2 minutes. Okay, so in 2 minutes, I will revalidate the trade, and then it will be valid for another 15 minutes. Okay, and then we'll move into the S&P and look for the same type of trade in the S&P. Okay, so let me take a look at your questions here. Let me see. Well, actually, you are making it quite easy for me up to this point. All the comments in the comments box are hellos and good mornings and all of that. So it seems that you guys are following. But just out of extra confirmation, could you please, guys, confirm that everybody is with me on the plan for the trade, even though I did it, let's say, quite quickly, if you wish. But I would like to confirm that this is the case. So give me a little bit of a confirmation. Yeah. Royce, the calibration I am using is 0.5, which is the calibration that comes by default with the app. I mean, this is a very good question because I am guessing out of your question that you have been watching the calibration session that we did on Saturday, isn't it? It was a 2 full hour session only to talk about calibration, and I did talk about another setting that I prefer to use. Okay, so we can certainly go ahead and work on changing those settings in my workspace. But remember, I also said on Sunday that all calibration settings are valid. It's a matter of preference on how active you want to make yourself or how passive you want to make yourself. Okay, so at the moment I'm using 0.5. Very good. So we had an update on the average here, and what I would like to do is I would like to compare the prior value of the average, which was 73.83, with the new value of the average, which is 73.80.5. So we are having like a drop on the average of 2.5 points. Therefore, in one hand, I would say the entry may still be in the right location. In the other hand, I am a little bit concerned that when we got to this UFO, the average may not, we may miss the trade. That's what I meant to say, because the average may be happening prior to the UFO, since the average now has dropped by 2.5 points, and we may miss the trade. Okay, so I would like to be diligent here, and first I'm going to look at the S&P, as I said, but I'll keep an eye on the Nasdaq, and if I see the Nasdaq or the S&P going up, I'll go take a look at how this moving average updates, and if I see that as price is going up, this average is moving up towards the 73.81 value, which is our entry, then I will leave my entry as it is. If I get to see that the average remains below the UFO, then I may either need to cancel the trade or move my entry a little lower to not to miss the trade. Okay, so I will decide that in a minute, but in the meantime, let's go check the S&P. So here's the S&P. Big difference between the S&P and the Nasdaq is that the S&P is showing us red. Okay, the Nasdaq is not showing red yet, but the S&P is. Okay, and this is good to know. It's showing short-term weakness, or actually I like to call it strength to the downside, because it's a movement. It's a downtrending market, and it's showing strength to keep moving down, even though in English language you could argue, you could call that weakness, but I prefer to think about it the other way. And based on this, the first thing I'm going to have to do, and based on the steps that you have learned in the sharpening sessions, the first thing I'm going to have to do is not to look at my target on the 15-minute time frame like I did earlier, and I found out that this UFO was located at 22. You guys remember that? There was a UFO located at 22, but it's been traded deeply, and therefore it's been removed. So now the target would be 2819.5. But because the trend is strong, I will need to look at the 60-minute time frame. And when I look at the 60-minute time frame, actually there's not much there. Okay, until we get to the next UFO, which is located much lower. So this, if this happens to become a reality, which is certainly possible, we may be talking about setting targets located at 2786.5. So if that's going to become a reality, guys, be ready, because on TV they're going to be talking about the world is ending another day. Okay, and it's going to be another, whatever amount of percent per day going down, okay, like it's been happening in the past days. Okay, and by the way, some of you reported amazing trades in yesterday's session. Thank you, China. for those amazing news that helps so much us traders, because those news inject orders in the market, isn't it? And because we have the UFOs, we find them, we join the moves, okay? So what do we have here? Okay, so we have an average located at 28.23. Okay, 28.23, that's where we have the average. The current price is below the average. Oh, wait a minute, I was looking at this and I'm thinking it doesn't make sense because I was looking at the 60, okay, and we're looking at the 15. This is much better now. So 28.25, okay, that's the price we're looking for. So this UFO in the share bar will not be valid. Okay, by the way, before I do the S&P, let me go back to the NASDAQ, guys, the life of a trader, moving up and down from chart to chart. So 73.79 as the NASDAQ is coming back up towards the entry. So I want to keep watching this, okay? I'll go back to the S&P. Here we go. So I was saying on the S&P that 28.23 happens to be below the average, and that's okay. But the problem is that the current average is 24.89, and the top part of this UFO is actually below the average. So the whole UFO, not only the entry point, but the whole UFO is below the average. So we're not going to use that one. But the one on the left, 28.25, 28.26, that one could do. Okay, and if you think about it, we kind of have the same one here. Okay, 28.26. Okay, 28.26 with a bottom entry here. What would be? Could we maybe merge those two guys? What would happen here? So this is gonna be 27. So if I put my stop in between, I'm gonna be one tick away from that guy. So if I was to merge the two and treat them like it's one. Okay, treat them like it's one UFO. Okay, 27, 25, 28, 25. That would actually also add this one into the equation. Okay, so you know what? Given the fact that my target is so far away, this is worth it to do. You're gonna increase the risk of the trade by doing that, because now the risk is gonna be from the bottom part of this UFO all the way to the top part of that UFO. So it's going to be a much larger risk, okay? But at the same time, it's a reasonable risk given the fact that our target is located at 2786.5. So there is a lot of room for this to keep falling, okay? So it's actually a reasonable trade. So now, the bottom part of this UFO is located at 24.5, which is below the average, okay? Which is okay, but at the same time, I feel much more inclined. If you look at this value, 25.5, 25.25, I think that you read my mind. I'm going to be focusing on 25.25 as an entry, just to minimize a little bit more risk, because, you know, this merging of UFOs increases the risk. So I'm willing to expose myself to maybe missing the trade, but in exchange for a better reward to risk ratio. So I'm okay with that. Okay, so let's go ahead and make sure we got the right quantity of contracts. I am using 2 contracts. Everybody, you would need to calculate the size that you want, but I'm gonna look for 28.25, sorry, and I'm gonna enter a trade here. Okay, that's gonna be my entry with a stop located at 75. Okay, with a stop located at 75. So notice how my stop is above this UFO, but also above that UFO, okay? And here as well in the white space. Okay, so I don't have my stop within some UFO. My stop is in the middle of nowhere, if you wish. And now what I know is also, I know that my risk is from 28.75 to 25.25. I have a risk of 3.5 points, which if I project this to the bottom part, that's gonna put my safety target located at 22. Okay, so this is my safety target, which is 22. And then my final target, okay, that one I'm gonna have to drag it a lot. Okay, there's a lot of dragging to be done. We're gonna move all the way to 2786.5. Okay, and again, we may not get there. The further away the target, the less likely you will get there. But remember, we're gonna have trade management rules to follow. We're gonna be trailing the trade, trailing the stop, etc., etc. And these could be a beautiful trades for us to enjoy. Okay, look at, now you can visually see how the edge timeframes recalculated their scaling, and you can really see the proportion of profits that we are about to make in this trade if right, compared to the size of the loss that we're gonna make if we are not right. Okay, so that's the trade. And good news, in 6 minutes the market will open. You have heard me say that before. Right before the market opens, normally everything cools down, everything becomes borderline with boring. Okay, then the market opens and then craziness begin. And craziness in this case means you may get stopped out, or you may start moving towards your target very quickly. Okay, and hopefully the second is going to be the one. Probability is on our side, so it's not only hope out of crossing fingers. It's actually a probabilistic approach to enjoying that potential move. Okay, and so we'll be ready to execute, knowing as well that the moving average will recalculate, and therefore we may need to readjust the trade. Okay, in the meantime, let me take a look at the Nasdaq and then a look at your questions to see if anything has happened on the Nasdaq. Well, the Nasdaq has been moving down, so I still have the question mark when it comes to if my entry on the Nasdaq is going to be in a good location or not. Okay. And I would like us to act quickly here, guys. If you happen to have your both orders in the system and you have been mimicking what I've been doing, I would like you all to be ready to execute or execute quickly or cancel quickly, because what may happen is that as the market open, let's say the S&P trade is still valid but the Nasdaq is not, then you will need to go ahead and cancel it, because what you don't want to do is find yourself with both trades filled at the same time with a maximum position size per trade, because now you just double your risk for your account. So it's either, if you're willing to be executed in both trades at the same time, you go with half of the size per trade, half of the size of what you would normally do, or if you are willing to expose yourself to both fields, the moment you get filled in one trade, you will need to cancel the other trade at the speed of the light. Okay, so make sure you keep that in mind. And obviously, if you were to have a preference, I think it's a no-brainer. I believe that we all appreciate much more the S&P trade, just because of the fact that we are already seeing the red show up here. Okay, the red show up here, which it doesn't mean anything, but at the same time, it doesn't mean anything in the form of guarantee, but it does mean a lot in terms of what's going on. And what's going on is that, some sort of strength is developing in this beginning movement to the downside on the S&P. And therefore, if the market pushes down and we get filled on the entry, it will be a happy trade. Okay. So anyway, looking at your questions, yes. So mass cryptocurrencies obviously is a very, very interesting asset, and I 100% welcome your question. At the same time, cryptocurrencies will not be an adequate market to trade such small time frames, because cryptocurrencies don't trade in an exchange that is regulated or centralized, and therefore brokers will set up some sort of a spread, and in order to catch short intraday moves, you may suffer too much slippage and it may not make it worth it. Putting on top of that, not every broker for cryptocurrencies will allow you to short. Therefore, in this session, my main focus will be futures and Forex, okay? And we can certainly look at cryptocurrencies, but I would welcome much more to do it from a point of view of investment much more than trading actively, okay? Because really, it's not like, I'm not saying it's wrong or you cannot, and if you want to do it, you can certainly just replicate what I'm doing with the cryptos. You can do the very same thing, same rules, same everything. But at the same time, you do have a disadvantage on your side, which is the asset itself. The cryptos, again, don't trade in a centralized exchange. Different brokers will have different exchanges will give you different quotes, different prices with more or less slippage. Some will allow you to go long and short. Some will only allow you to go long. So again, you have a lot of things against you, and you have no leverage. So the amount of money available to trade cryptos is your money, where with the futures or the Forex, with less money, you can have bigger trades, which will allow you for better profits in a safer environment, because futures and Forex is much more regulated. Futures is actually centralized, trades in an exchange. So you have a safer environment and a smaller move, which is safer to catch, pays you more than the crypto moves because you have a 200 to 1, 300 to 1, 400 to 1 multiplier, which is your leverage. Okay, so if you don't mind, Mas, those are the reasons why I will not be looking into Ethereum today. But I am happy in future sessions to obviously look into that because you are pointing at a relevant market. Okay. Good. So 1 minute for the open. John Hammer, interesting. 2783 would be the target if the calibration is set to 61.8. Yep. And again, realistically, guys, we are not too likely to get to 86 or 83. It's very far. But we will be probably trailing stop, moving down as new UFOs form. And let's say we collect 3/4 of that move, we'll be delighted. Okay, and if we get to the final target, wonderful. Okay, and on top of that, the key really is to be mechanical. Okay, so anyway, before I keep looking at the questions, the market just opened, so we start having updates here on our chart. The new update for the average is 24. Remember, the entry is 25.25. But again, I'm pretty confident in this one because if the market goes back up, the average will move back up. So we should be able to hit that 25.25. So we should be buying around the average. Okay, what about the Nasdaq? So with the Nasdaq, the market now is coming back up actually, and we are hitting the average, and our UFO is much higher. So I'm just gonna cancel the order with the Nasdaq. So everybody cancel the trade with the Nasdaq because we are hitting the average, but the UFO is not closed yet. Okay, so click on the yellow button to cancel the order. Okay. Let me see. Okay, interesting. My matrix is not responding. Okay, yeah. Okay, so yeah, I just canceled the order right on time. Okay, so right on time I canceled the order with the Nasdaq. I was having a little bit of a slowdown on my side. Again, happy to cancel the order because we are being filled. We would be being filled above the average. Okay, but now we are about to get filled on the S&P, and that one I welcome it because we are entering the UFO while we are entering the average. Okay, so let's see if we get filled. We should be filled on the S&P. I'm not sure exactly. Now I'm filled. Okay, so we are in the trade, guys. The market just opened, and again, I was calling it craziness. Okay, you know, craziness, beautiful craziness, maybe I should call it, which is the market open, and we are about to see two possibilities. It's either, and I know what I'm about to say is obvious, but it's either the market is going to start moving our way, or the market is going to start moving against us. And normally the beauty of doing this at the beginning of the market hours is that it normally happens quickly. And when I say the beauty, it's my personality. I do appreciate that. Other traders, you may say, oh, wait a minute, you know, I'm not so sure I do appreciate that. You know, I'm not too keen to have markets moving so fast, and maybe I prefer to trade at a different time of the day. And if that was to be the case, it's fine. Okay, it's fine. Not a big deal, but in my case, I like it. What can I say? So I'm just sharing with you, you know, instead of craziness, I'm calling it beautiful craziness. Okay, I don't know. We just invented a new term here. Anyway, so I want to flash very quickly as well the trade management rules that we have. Okay, because now we're gonna be looking at time stops, too far, too fast. You know, we have a collection of rules. You know, for us to take into consideration. So remember, on the left side, we have a time-based chart. Let me see if I can zoom in. Yeah. So we have a time-based chart. We are now running two candles. We are candle number 2. Okay. So one of the rules, if you are strict on the risk management, one of the rules is if in 3 to 5 candles you have not reached the safety target, okay, then close the trade if you are in profit, okay, or if you're not in profit, just wait until it's break even and get out. At the moment we are in a little bit of a profit. We can see there is a big fight. That's one of the reasons of using a safety target. Okay, that's one of the reasons of using a safety target. There is a big fight, and you know, if the fight is not defining itself clearly in little amount of time, then it could be problematic. Okay, so we are now entering candle number 3. Okay, candle number 3 just entered. So at the end of this candle, we're gonna have to take a decision. If you are using that rule, remember that rule, we said it's optional, is the most conservative rule, and being super conservative, the rule of 3. Some of you may use 5. Okay, someone sent an email to me yesterday telling me that you were planning to use 6 instead of 5. It's okay as long as you have rules and you follow the rules. Okay. The point is that, remember, this rule is optional and in the room, because my priority, especially because I know that not all of you have traded for a long time. I mean, some of you are definitely experts, but some of you are not, based on your emails. So that's how I know. Therefore, I want to keep it. I want to keep you all safe, and therefore, I'm going to be in the conservative side. So if this candle is not clearly moving, I'm looking at the candle on the right. If a new candle starts forming, and I'm in profit, I'm just gonna close using the close button, orange button on the right, and definitely it's really not looking good, because we are still very far away from the safety target. Okay, so I'm just gonna give myself an opportunity here, and the moment a new candle form and I see green, I will be closing the trade. Here we go. I just closed the trade because this candle is about to close, so I believe I just captured $25 of profit or something like that. That's it. Okay, so I'm out. Okay, so basically, or let's call it break even, as you can see here. Okay, so nothing much has happened. There is a lot of fight here at the moving average. Okay, and now two things may happen. Some of you may be in the trade because you are less conservative than the action I have taken, which is absolutely fine. It's part of the plan. Remember, this is if you are conservative. And again, it's not like we spend years together in these sessions. So I'm repeating myself, but I want to make sure all of you understand that my priority is to keep you safe, because keeping you safe, that's how you will start making money. Okay, and but I could also understand that some of you are more experienced and therefore you are not so conservative anymore and you're still in the trade. And guess what? This trade is still valid. We still have the red UFO above. All the parameters of the trades are still valid, and you may get to the ultimate target, and I will congratulate you for that. But what I'm doing for myself is I am out of the trade. I didn't make money. I didn't lose money. I'm going to allow the market to prove itself. We are talking about 9 minutes from now, we will have a new close in the bottom part of this chart. And the moment we have a new close, I will know if we are now back in an uptrend or back in a downtrend, right? And if we happen to be back in a downtrend, okay, I'll be looking at new UFOs that probably will have formed. And if we are in an uptrend, then we will be looking for the green UFOs that will probably be forming and replan trades and redo the whole thing I just did before. So the last thing you want to do, and now I'm talking about trading psychology, the last thing you want to do if you are out of this trade is now to be frustrated or allow your emotions to drive you and be eager to re-enter or anything like that. Just let the trade come to you. Let the market tell you what is really gonna happen. Okay, and at the moment we don't know yet. Okay, so we need to wait until every 15 minutes, isn't it? Because we're using a 15-minute time frame below. Okay, good. So quick look at the Nasdaq, and I will look at your questions as well. So the Nasdaq, it's above. So it's looking like, and again, it doesn't mean it's gonna be like that, because 8 minutes is a lot of time in these time frames. It's looking like the Nasdaq may be reversing, and just like the S&P, and maybe close for an uptrend. Okay, and if that's the case, then we will happily change our mind, and instead of shooting for that target of 86, we'll be looking for a higher target and replan the trades. Okay, so to anticipate that, just to be quick, okay, what I'm gonna do, since we are showing green and the S&P is above the average, so there is a possibility, I don't know if it's gonna happen or not, but there is a possibility for a new uptrend to begin, and if that's the case, it's gonna be a strong uptrend. So I'm gonna look at the 60-minute time frame of the S&P, I'm gonna look at the red UFOs, and pick my target in the 60-minute time frame, which is going to be 2848.5. This would be my target in the 60-minute time frame. Okay, I'm gonna do the same for the Nasdaq. So I am prepared because the Nasdaq as well is looking like, if it closes the way it is, it's going to be a strong uptrend. So then I'm going to, instead of use the 15-minute time frame like I did before, okay, let me see if I can maximize this chart where, okay, now. Okay, so I'm just having a little issue here with my TradeStation, a little slow. So you know what I'm about to do, isn't it? When you feel your TradeStation is going slow, it's because you're accumulating data coming into the cache folder with some delay, probably because of the internet or whatever. And that means that your TradeStation, it's likely going to experience even more slowdown and potentially a crash soon. Okay, so what I'm going to do is I am going to reset TradeStation before the next close in 6 minutes from now to avoid that problem. Again, my case, you know, you see me often, unfortunately, in some of the sessions having to reboot my TradeStation, and there is a reason for that, and the reason basically is that it's consuming a lot of my CPU to be streaming those sessions via YouTube, and this is restricting TradeStation when it comes to CPU available, even though you know, it's not like I'm processing too much, but at the same time, you know, graphical stuff utilizes a lot of power from your computers, and streaming video in HD uses a lot. Okay, so that's why. Okay, but again, out of experience, okay, what I don't want to see, I don't want to do, is to end up with a crash in the middle of a trade. So out of precaution, I am now restarting on my other computer screen. You don't see it, but you will see in a minute TradeStation on your screens. Okay. So in the meantime, while I'm booting TradeStation, let me take a look at questions. Oh yeah, John Hammer, I was going to make an extra comment to you, John, when you said that with the 61.8, the UFO is 27.83, and I was saying that on Saturday when we did calibration, I said that any value is fine. That obviously there is an impact on how you calibrate. It's critical, actually. We spent 2 hours talking about it, isn't it? But at the same time, the most important thing of all is that once you have decided your calibration settings, okay, that's what you use. And what's super, super important about this is the fact that that will make you mechanical. Okay, so super, super important concept to never forget, that more important than being right or wrong in trading is to be mechanical. Because if you do something that makes sense mechanically, even though sometimes you'll be wrong, because what you do makes sense, you'll be right more often than wrong. And because you're mechanical, you will produce consistent action leading to consistent results, in this case, consistent profits. Where if what you were to do was to be random, right? Or you keep changing your mind or something like that, okay? And you keep changing calibration, you keep changing time frames, you keep changing everything, then there is too much variation. And therefore, that's random action leading to random results. Okay, so 60-minute time frame of the Nasdaq, looking for the upper targets. So with the Nasdaq, we will be shooting for targets. If it becomes an uptrend, it's going to be 74.75. That would be the target if this market becomes an uptrend, which we will know in 3 minutes now. Okay, so 15 minutes. By the way, I didn't ask you how many of you got to execute the trade with the S&P. You know, anyone still in the trade? Anyone got out? Because in the end, you can see how the time stops are useful from time to time. Sometimes, like every decision in life, sometimes it would be better not to use a time stop. But since you don't know, because we don't have a crystal ball, and since I was behaving conservative, you can certainly see the benefit of using a time stop, isn't it? It got me out of trouble in this particular case, okay? So I know my target, let me rephrase it for you, 2848.5 for the S&P. I know my target for the Nasdaq, 74.75, okay? And now it's looking like we're gonna have an average recalculated around 26, okay? And around 26, at the moment, we don't have any UFO on the S&P. So at the moment, it doesn't look we may have a trade on the S&P. What about the Nasdaq? So as you can see, I am trying to anticipate what's about to happen, so that way I don't miss the trades. Is that making sense? So with the Nasdaq, it seems that we're going to have an average around 81. Around 81, I got nothing here. Around 81, I got nothing here. Around 81, I got nothing here. Okay, so it seems that maybe it's either the Nasdaq have a last strong push, bringing this to 82, something like that, or more, and maybe we can use that green UFO, or then we may need to wait another 15 minutes for the average to be pushed up against even higher in the next candle. Okay, again, patience, pay, discipline definitely is the way to go in trading. Okay, guys, so if that was to be the case, no worries. We're going to move into the Forex market and the Forex world and look for trades in Forex, and then come back in 15 minutes and look for the other trade. Okay, and that's it. So what do we have? Well, we have an average located around 84. Okay, we have the average located around 84, and 84 is more or less here. So actually, we do have a trade on the Nasdaq. We do have a trade on the Nasdaq. I'm just a little concerned for when this market goes down, the average will go down too. And even though now it's pointing at 83, 84, I am concerned we may be buying too close to 82.5. So I'm just a little concerned. So let me look at the S&P, because if the S&P was to look clearer, maybe I will go for S&P. So S&P is looking at 27. So 27, oh, look at that. Here we go. 28, 24. We got a trade. Okay. So 28 is not good. 27.5 is not good. But 28.5, 24.5 should be okay. Okay, that should be okay. So let's plan a trade. We're gonna be going long now on the S&P. So we are now going to have an entry. I'm gonna use 28.5 just because it's the inner circle. I don't wanna go deeper into the inner circle. And this, it's technically above the moving average, okay? But again, I guess it makes sense. I'm just gonna have to watch this average as price comes down. I wanna make sure this value is above 24.5, okay? And as it's going down, I can see it was 28, now it's 27. So I just need to watch that figure. I don't wanna buy below the average, okay? That would be a problem. So let's go for it. So 28.5 will be my entry. I'm gonna get long here. So click buy long. My stop will be located right below. So right below is gonna be, what did I just do? Oh, it just came in. Very good, perfect. 24.25. This is where the stop goes. Safety target is gonna go a little higher, right there. And then my final target, so we're in the trade, guys. My final target, we said, is gonna be 28.48 something. 28.48.5. So I got some scrolling to do. Hopefully you guys are with me on setting up this trade. Here we go. 28.48.5. Okay, so I got my trade. Again, we just got filled here. UFO kicking in. We are buying a little above the average, as you can see. As you can see, the concern I had is still a concern. 26 is the current value for the average. The bottom part of the UFO is 24.5. So I'm a little uncomfortable in the sense that if it keeps going down, it may push my average close to the limits, and I obviously don't like that. Okay, but anyway, I am in the trade, and it seems that even though it's a little bit, closer to the limits, if you wish, it's definitely meeting the plan. I am inside the UFO, even though the UFO went away, and now I am, reacting to this average too. So I have unfilled orders. I have potential for new unfilled orders to be added. The trend is up, and we have strength on the trend. So even though at this moment in time it's not looking too healthy, we are just following the rules of the plan. Keep the discipline, managing emotions, and being patient and allowing the market to do what it has to do. In the meantime, I'm gonna zoom in the left to also begin our count with the candles. So 1, 2, we are actually in the third candle. We just got stopped out. So this trade didn't work out. So we are out of the trade, and that one was not a profitable one. Okay, guys. So out of the trade in this one, guys. A quick one. So a little bit of a fight here, guys. Okay. So this is when the market is a little bit of a teaser, isn't it? So we got short and then started moving in the opposite direction. Now we got long, started moving in the opposite direction. And the funny part is that it was showing weakness and then it was showing strength. Okay. And in both cases, it ended up moving in the opposite direction. Okay. But again, discipline and following the method is what matters the most. Okay, guys. So we're going to wait for the next, that would be 11 minutes. This is when the market would have a new close in the 15-minute time frame below. The market will redefine itself, and we're gonna just do it again. Okay, and that's how you make money, guys. Okay, even though the beginning part of the session today is less happy than others, but this is trading. Okay, so you can see there is a pretty strong push going down, and so we'll be able to reassess that in 11 minutes. So time for me to look at your questions, time for me to look at a little bit of Forex, and in 11 minutes I'll go back to check what we have, plan a trade, and we'll conclude the session. Okay, and I will replan trades on the S&P and the Nasdaq. Okay, but let me take a look. Devan, which one you prefer, the Nasdaq or the S&P, based on odds and answers? I don't have any preference. Whichever gives me the setup, I'll take it. If they are both giving me a setup at the same time, and one is giving me a greater profit margin than the other one, then I'll take the other one. Then I'll take the one with a greater profit margin. That's it. With all equal, I would prefer the S&P, because with less contracts, I pay less commissions and I make more money, because of the point value is more, right? But that's it. Orlando, hey guys, just checking. Yay, how are you, Orlando? My pleasure, my friend. Maverick, 7 candles is okay. It's about you having a rule, okay? Remember, the 3 candle rule is very conservative, okay? The 5 candle rule is still conservative but less, and 7 is even less conservative. So it's kind of like you are almost stepping in territory where it starts not making much sense, if you wish, to have a time stop. In other words, you are almost never going to use it if you use too many candles. Okay, but it's certainly a valid rule. Okay, I'm just saying that probably you will use it very few times. Irwin, 3 candle limit would be based on minute or 3 candle of entering a trade? Minute, because it's minute. Okay, so when we apply the 3 candle rule or 5 candle rule, we are looking at the chart on the left. So we use the 2-minute edge time frame. Bojan, yeah, thank you for that. Lisa, you got out at break even, very good. Royce, you got out. Milan, you got stopped out at that one, I get it. John got out, no damage, got it. Andrea, you got out at minus 75, got it. Good management, Lisa, Andrea, sorry. Even though obviously, as I said, this is not the happiest trade, but it's part of trading. So good job. Bojan, Jose, I have a green UFO, 28.5 on the 2-minute on the S&P. I guess that was before we took the trade. Andrea, so you don't take both ES and NQ together. If I do it, Andrea, it would be with half the size, or I had taken S&P or Nasdaq first, reached already the safety target, and then more than happy to add more. Okay, but not entering both at the same time, because they are 2 correlated markets. Okay, and therefore I'm doubling my risk. So the only way I would do that is with half the size. Babu, for any reason, do we need to look at the supporting UFO green or red in the higher time frames to see? No, Babu, absolutely not. Actually, you saw with the stats, and this, by the way, and Lisa, you are here with us today, and I never answer your question on Saturday when it comes to what is better, the higher or the lower time frames. Well, you could answer the question yourselves, and this applies to you, Babu, as well. Look at the stats in a lower time frame and look at the stats in a higher time frame. Okay, and you guys tell me what is a better stat. Okay, and you will see how the lower time frames give you better stats. Okay, so this common, how do we call it, principle or belief in the world where the higher time frames is like the Great Wall of China and all those things. Yeah, for market analysts, yes. When it comes to doing a market report and commenting on what happens, the larger time frames are very, very important. But in the world of computer trading, which is the markets that we have nowadays, computers trade lower time frames many times a day, and therefore lower time frames are much more relevant nowadays. Okay, so could you look at the higher time frames? Yes. Would it hurt you? No. You would have, you would add more information to your analysis, which many times would be confusing. So let's keep it simple. That's my proposal to you all, guys. Andrea, yeah, the S&P and the Nasdaq on the same period, okay? So S&P and Nasdaq in the same time period, okay? But having said that, notice how, even though the time period is the same, so the answer to your question is yes, same time period, but remember, notice that the share bars or the tick charts are different values. Okay, so when you say time period, I want to make sure you are referring to time. Okay, because it's very easy to say time because it's a time frame, and next thing you know is a share bar or a tick chart, and actually we should not call it time frame, we should call it interval. Okay, it's an interval, it's not a time frame, even though we are probably used to call it time frames because everybody in the world calls it time frames. Okay, good. Yep, the lower terminal is playing very good. Babu, I mean 60, 180, 240 daily charts. Well, again, if you are planning an intraday trade, which is what we're doing today, those time frames are not going to be adding anything relevant. Okay, again, common knowledge would suggest you start from the bigger time frame and then you go down, and basically you end up wasting your time. That's what you're doing. So you put a lot of time in front of the charts to find a trade, and then you end up with no trade. I'm sure that many of you have been in trading sessions before, and you spend a lot of time in a trading session, and guess what? There was no trading. There was a lot of talking, but no trading. Where when we get together for 1 hour, I believe every single week we got executions. Unfortunately today, they are not executions that provided a profitable outcome for us, which is part of trading, but every single week we got execution. And what's my point with that? It's not about bragging about it. Please do not get me wrong. It's really not about that. It's about making you aware of the benefit of saving time, because you don't want to spend 45 minutes to plan a trade, right? Especially if the trade is going to last 45 minutes. Okay, so very good. Yeah, Elaine, Jose, will you include different time frames for TradingView since they do not offer tick charts? Yes, we will do that. We will do that. And I want to look into the range charts with TradingView, because maybe I can give you a little bit of a tweak that could be useful in TradingView. But really, where TradingView is going to excel at is really to do the Forex trading. Okay, so let's go ahead and plan a trade with Forex with TradingView. Okay, so I'm just gonna go ahead and I'm adding it manually. Okay, so all of you get to see the process so you can replicate that for yourself. Let me remove the UFOs below. So below in the bottom part, okay, what I have here is a 60-minute time frame of the S&P. That's what I have below. And what I'm gonna do for this time frame is I'm gonna add a moving average. Okay, exponential, and I'm gonna add and I am going to add the indicator directional movement index. Okay, and I'm gonna try, oh, sorry guys, I just clicked in the wrong place. So I want to add it below. So directional movement index. Here we go. And again, I'm doing this pretty quickly, but if that's too quick for you, it's okay. You can watch it on YouTube, play and pause at your own speed. I'll do it quick here so we don't spend too much time on how this works. So I don't need to show ADX. I'm gonna make my plus to be green, and I wanna make it histogram, and I wanna make it thicker, and then I want to make my minus to be red, and I want to make it thicker, and then I want to make it histogram as well. Okay, and if I do that, basically I just replicated the same workspace I have on TradeStation on TradingView, and I can see that the euro is in a downtrend, and because below is red, so the downtrend is strong. So now that I know this in the 1 hour time frame, I'm going to click on the upper chart, which as you can see is the 8-minute time frame. And what I'm looking for is I'm looking for red UFOs. Sorry guys, I'm looking for red UFOs located around 112.27. So the question is, do I have that? So I'm just gonna be activating my last label values, okay, and look at 27, and I don't have anything at 27. So with the euro, I do not have a trade. Okay, so I'm gonna move very quickly into the Great British Pound. Let's look at the pound to see if we have a trade on the pound. So the pound, GBPUSD, is also in a downtrend with an average of 129.34, right? So if I look at the upper chart, which is the 8 minutes of the Great British Pound, and I'm looking at 24, well, notice how I have here two red UFOs kind of overlapping each other, and they are located around the price level I am looking for. Okay, and with Forex, it's always okay to be a little more flexible with the price points that you enter and exit the trades, because it's a decentralized market. Okay, and by the way, earlier, Mas, you were asking about cryptocurrencies. You could be doing that with the cryptos too. Okay, the only thing is I would not recommend you to use such short time frames. Okay, I would recommend you to do it with larger time frames. So what would you do here? Well, first, let's go ahead and activate AutoUFOs. Okay, in the 60-minute time frame. But remember, because the trend is strong, instead of the 60, I'm gonna go for the next normal time frame, which is 4 hours, and I'm gonna be looking for the next green UFO, which is located at the next green UFO is right here. Okay, TradingView got a feature which is actually quite cool, even though sometimes it could be confusing, which is I have selected no overlapping labels. So no overlapping labels means that if the labels are too close to each other, they are just put on top of each other, and therefore they may not be aligned with the lines. So really, this green line corresponds with the first green label. So that's 128.32. Okay, 128.32. This is the price that we're gonna use as a target for the Great British Pound. Okay, 128.32. So that's gonna be the target. Let's disable the UFO. I'm just gonna click on the show high, the little I, and it will disable the UFO. Okay, let me go back to the 1 hour time frame. Okay, so we keep looking at the trend. Okay, so downtrend, strong downtrend. So we use the 4 hour time frame to set the target, and now we're gonna have to talk about the entries. So the entries, okay, are gonna be 129.22 with a target located, okay, at 129.44, and we need to, add a little extra. So I'm gonna make it 48, 129.48. Okay, so basically, let me write it for you. If your stop, and be ready to take a screenshot, by the way, is 129.48, and your entry is 129.22, and your final target is 128.32. Okay, so this is the time where you want to take a screenshot. Okay, so if that's the case, so we are shooting for a 90 pip movement, right? From 22 to 32, we got 90 pips, 90. And to do that, we are risking 26 pips. So we are risking 26 to make 90. which is a reasonable move, okay? And certainly, it could be useful for you to use a safety target, okay? Safety target located below, 26 pips below, so it would be 128, and that would be what, 96. So 128.96 would be your safety target, and your final target would be, as we just said before, 128.32. Okay, so this would be the trade. Okay, this will be the trade. And before we conclude the session, because we are past 4 minutes, but before we conclude the session, as I said, I want to go back to the S&P and the Nasdaq, see if we got an opportunity, plan it for you, and give you the instructions so you can execute it yourself. Okay. Quick questions here. Abika, Jose, please do Forex spot. Yes, we just got a trade with the Forex spot. Helen, would you mind setting up the S&P instead of Forex? Well, I think that we are all going to be happy because I am now about to set up a trade on the S&P and the Nasdaq, Helen. Bojan, Jose went over the trust station setup of the EMA indicator and short-term sharpening session. You're amazing, Bojan. Thank you so much. Helen, yeah, he did both actually. Okay, got it. Perfect. Thank you, guys. Thank you. And again, you know, we are a diverse group of traders here, and therefore I'm trying to give everybody what you guys need. Okay, so what do we have here? Okay, so very intrigued to look at what was in the end, what was the close on the S&P, because what you know, what a funny day. Let's call it funny, just to be a little positive. Okay. It's like the market does not want to define itself. Look at that. Even to this point, you have a close, okay? The close is 28, 26, 25, where the average is 28, 26, 17. So technically we closed above, but look at how closed above we did, right? So it's just like, oh my God, like it's very, very huge battle between the buyers and the sellers. I guess that after the sell-off yesterday, there is a lot of people that want to go long, there is a lot of people that want to go short, there is a lot of people that are taking profits after shorting, and there is a lot of people that are taking losses after the fall. And this massive battle is creating the choppiness that we see at the beginning, where we are trying to mitigate the risk with our stops, with our time stops, with our precise entries, with our DMI, with our UFOs, with our everything, okay? And today, let's face it, is a difficult day to trade up to this point, okay? Maybe 1 hour later, you have a beautiful trend that starts defining itself very clearly, and you will have a fantastic end of the session, okay? So guys, make sure you watch it. But at the moment, on the S&P, I will not plan any trade because of that. And let's take a look at the Nasdaq. The Nasdaq is clear, okay? The Nasdaq is clear. Oh my God, we missed it. The Nasdaq is clear, and it gave us an opportunity here. You know, anyway, let me explain the opportunity and let me plan a new one. So close is below. I mean, let me double check that's the case. Okay, so I want to make sure the prior candle closed below. So let me give you that screenshot, 62.5, and the average is 77. Okay, so yes. On the Nasdaq, we are clearly closing below. We are clearly closing below and showing red. So we are again in a strong downtrend on the Nasdaq, okay? Notice how funny this is, okay? It went from strong down to strong up to back to strong down, okay? So again, huge fight today around the market opening hours, which is, you know, it's not a crazy thing to expect. So what do we have, okay? Well, we have a strong downtrend. Because we have a strong downtrend, we would be ready to utilize that 73, okay? You may remember, let me write it down, okay? We were talking about a target located at 73.63 earlier. Remember that? That was extracted of the 16-minute time frame, earlier, okay? So just as I was out of refreshing your memory, okay? That was where the target was set, okay? So we have potential to do all of this, but for this, we will need to find an entry, okay, located around 78, okay? Actually, we are in the UFOs, okay? So actually, we have an entry as we speak. It's time to enter the trade. My only problem is that I haven't had time to look at everything perfectly. Okay, good, easy. 95 is the top, 95 is the top. So let's enter the trade with a safety target, and then we have the final target, and the stop needs to be above 95. Okay, so let me do this with an order bar. Okay, come on, TradeStation. This is not the time to slow down. And you know what? The thing is what really slows down TradeStation is the matrix. And as you can see, there is a lot of trade going on. Okay, come on. Okay, here's the other bar. Okay, so I'm gonna add 2 contracts. Okay, now 2 contracts. Okay, and we're gonna be using a short 2 limit 1 stop order type. Moving this to this level. I mean, the price is going down a little bit. Okay, so not too happy about it, but as long I may enter market. Okay, we want the stop to be 73.95.25, 73.95.25. Final target, that one is easy. We said is 73.63. I'm guessing that you guys are mimicking what I'm doing. And the first target, that one would depend on the entry, and therefore I'm going to place it at 73.70 at first. Okay, wait a minute, guys. I think my target is not located in the right place. Okay, guys, let me do this. Let me do this right. Okay, I'm just trying to load the 60-minute time frame of TradeStation to relook into the target, because I have the impression where I may not have the right target. Okay, so this green thing below is okay. So I didn't make notes properly, guys. Sorry for that, for the confusion. Is 72.68.75. Okay, okay. Now this is the right note. I don't know how that happened, but I believe the target I had written for myself was a target in the 15-minute time frame, not the 60. So it was too near as a target, and I was surprised. Okay, so anyway, let's re-enter the trade. So we're gonna have an order. So okay, and this one, here we go. So enter short. So let me input the numbers first, and then I will tell you what I'm about to do. When I enter market, my initial limit is gonna be 73.70, even though I will need to readjust that. My final target will be 72.68.75. This is correct now. My stop will be 73.95.25. 73.95.25. And now, instead of clicking place order and that's it, so what I'm gonna look at is you can see how price is coming into the UFO. Okay, it's right there. Okay, so what I'm gonna do is I'm gonna be looking at since you know, I basically missed the trade. I just don't want to enter out of desperation because I don't want to miss the trade. Okay, that would be an error. So what I'm going to look is I'm going to be looking at my reactive time frames. Okay, and I just need to wait until a new red UFO to form. And the moment a new red UFO forms, okay, that's when I will enter the trade. And that's where I will begin this trading opportunity. At the same time, I am also looking at the clock. We are a minute and a half away from a new update on the 15-minute time frame below. So let's maintain the calm. Let's be ready to click, but at the same time, let's not be too eager to click. We need to be precise. So ready to click, but not too soon. Okay, so we're going to be waiting. This is a manual entry. I'm just doing a reactive entry, which is great because I believe I haven't had the chance to do this with you guys in the session. So it's a good example. And at the same time, it's giving you time as well to copy those figures and get the order yourself. Okay, again, big question mark, what's going to happen in less than a minute because it's looking like we may get a close above the average. So is it going to be above? Is it going to be below? If it's below, we will cancel the trade and we'll conclude the session. And if it's above, we'll cancel the trade and conclude the session. If it's below, then we'll be looking for those reactive red UFOs, new UFO forming, and then we will take the trade. Okay. So we just got a close above, and unfortunately, I will not be able to execute this trade. This trade is to be canceled. It's a short trade. We are now in an uptrend. Okay, guys, notice what is happening today. Okay, so the challenge in a day like today is the trading psychology. Okay, and for some of you, especially if you have limited experience in trading, probably today is a good day to just go do something else. Okay, because if you keep trying to force a trade, you may end up challenging too much your emotions. And again, we gain more and more control of our emotions the more experienced we are. That's why I said if you are a new trader, you may not have that emotional control when it comes to your trading mindset. And therefore, it's now time to go to the gym, come back 2 hours later, and then with a different market condition, go ahead and plan the trades. Because certainly today, it's a challenging day. Okay, guys? So good job for being there and being ready to execute and take the trades. But my friends, the market is to be respected. Let me see. We are about to conclude the session here, guys. Yeah, Bojan. Yeah, so you had an entry, you didn't get filled. Yeah, inside days, Royce, you have a point. Could be a little bit like that, but normally within inside days, you have a little bit of a range. And if you think about it today, the market, it's not too exciting when it comes to its range, especially compared to the prior days, okay? And so normally it's more of what I said before, where many people are taking profits, many people are taking losses, many people are trying to enter long, many people are trying to enter short with either greed or fear. And that creates a fight, and the market goes sideways, okay? Good. So guys, we are now concluding the session. Okay, we are now concluding the session. Good job in any case. And what I love about this is that we are encountering real market conditions together. Okay, that's why we don't call these sessions, well, we can call it anything, right? We can call it mentoring, we can call it trading sessions, we can call it trading rooms, we can call it mentoring sessions, we can call it many things, but we don't call it that. We call it get together. Why? Because that way we encounter things together. And therefore, we got the opportunity to discuss it together and learn from it together, and not only talking about the techniques, which is key, and this is where most of my passion is, those beautiful little UFOs, but at the same time, the mindset of the trader is really what's going to make you excel. So understanding the trading psychology of the market and your trading psychology is key, okay? So the market is now pushing higher. So you may have a trade in a few minutes from now. Well, new UFOs form lining up with the average, etc., and you can certainly plan on those trades, okay? Actually, you have one now that you could plan, even though I will leave that to you, okay? But you could certainly 73.85, 78.5 definitely is within that average. Okay, so this is something for you to analyze now as your homework, and if you feel the trade is valid, you could certainly execute it. Okay, and certainly could work. Okay, because it does meet the conditions. Okay, the only recommendation, careful, even though it's an uptrend, it's a weak uptrend. Okay, guys, weak uptrend. Take a look at the little red that is showing here. Okay, it's a weak uptrend. Okay, so careful with targets. Okay, you need to set the target with the 15, not the 60. Okay, even though in the current candle it's looking like it's strengthening, Remember, we defined the market based on the prior candle. Okay, the prior candle had a close above the average and shows weakness. Okay, weakness to the upside. So careful with that. Okay, because we can certainly see the market go back down. So you want to have a close target. Don't shoot for too far, not yet. Okay. Anyway, everybody, super pleasure concluding the session today a little late. To be honest, it happens often, isn't it? I guess it's our passion for trading, but what can I say? Everyone, before we go, click on those thumbs up, please. And also, if you haven't subscribed to our YouTube channel, make sure you subscribe. You subscribe to the YouTube channel. Make sure you also click on the bell to get the real-time notifications. Okay, guys? And I will see you on Thursday for our regular longer-term session. Everybody, see you then. Bye-bye and take care, my friends. Bye-bye. Keep up the good work, okay? And discipline. Bye-bye.